should we say you're running towards them, Jeff? You're tiptoeing.
I'm listening.
You're fast walking.
Yes. Yeah. I don't know if I can sprint anymore in this old body, but yes.
Why do all three of these sort of perk your interest a little bit?
Well, the old bond trader in me, Kelly, has to really take interest in the fact that for the first time, we really have to listen to the bond market. Everyone is so predicated, all their investment theses for 2023 is based upon what the Fed is. Historically, I don't know what the technical term is, but the Fed has been horrible on forecasting. So we're giving them a lot of credit. I take a lot of credence in the fact that the 2-year note is at 4.23%. We saw that max yield coincide with the max low in the S&P 500. So if we look at the S&P 500, Kelly, I think the bond market, you have to believe in the bond market. And that's the thesis, which is actually taking me overseas, because I do see this lag, this disconnect. What did we see earlier in the year? We saw the bond yields go from 1.5% in the 10-year up to 4.25%.
Crazy.
There was a huge disconnect and a lag in equities selling off. Now, all of a sudden, we're seeing some calmness come back into the market. So
you can say that on a day when the Dow's down 916?
Well, it doesn't feel good, but if you look at the S&P 500, pull up a chart the last 3 months, we haven't moved the exact tick. It's 3,882 on the S&P 500 exactly 3 months ago. So there's been a ton of noise, a lot to digest, but I think on days like this, you have to remain calm. I'm looking overseas at PGJ.
Golden Dragon.
The Golden Dragon. It's the NASDAQ Golden Dragon Index. Invesco's ETF gives you liquidity, gives you exposure to Alibaba, JD.com. NEO just got upgraded today. I was a little early buying this about 3-4 months ago, but I think this is a theme in 2023 as we see China reemerge. It's been very hard to measure China.
Sure, and Marco Papich told us the same thing last week. He's very bullish on China's prospects for next year. But let me go back to what you said about bonds. So basically, you said that stocks are tracking the 2-year yield right now. If you think that the 2-year yield's not going any higher, then you think it's safe to buy.
In a lag effect. Exactly right, Kelly. What I am seeing, and we talked about this before on CNBC, when we saw that 2-year note go above 4.5%, we saw a lot of institutions buying that yield, embracing that yield, I should say. It went up to 4.88, and now it's come back and simmered down. I think there is an opportunity for equities to really get over the opinion. And I know Bob Pisani was talking about earlier, that technical move above 4,100. That is when all of a sudden people say, aha, maybe the bond market was right.
Sure. If we get to that point, as we're still sitting where we are, let's talk about a little about one of the more controversial ones here that you're looking at, and it is Tesla.
It is Tesla.
Now, the stock, if you want to argue that the stock is underperforming the fundamentals because of Elon Musk, I can absolutely understand the case for buying it. That said, does it require some kind of management change to perform better? Does it face another year of tough liquidity, with what the Fed's doing here in the market?
So one thing I don't do is get political, right? But I look at sentiment. I think sentiment is really important. We talk about investor sentiment. This is a beat-up stock. We just saw Elon sell more shares, another big block just yesterday. So I think when you look at this, go back to November of 2020. That's when the stock kind of took a breath at 136, and there's been a parabolic move ever since then. So I think it's fascinating in this opportunity to buy it here. If you want to use options and really qualify and quantify what your risk is. But I think owning this here, we're going to get a lot of this political component, this undercurrent in the rearview mirror.
Why? Why is it going to go in the rearview mirror?
Because it's just maximized. It seems like in June we had maximum conversations about inflation. Back in October, the world is imploding. It was maximum equity scared. And you saw the pessimism come out. Right now, it seems like max Elon. Yeah. I don't know if that's a word, but it's max Elon. So I think there's an opportunity in Tesla. I think the technology will be refocused in 2023, but it's very hard to see it right now.
Okay, quick final word. You're also picking around a little bit in energy. Tell me where, why.
We are. And, I run a sector rotation model, and that model all year has been trying to find themes that make sense and, more importantly, stay away from sectors that are really revealing weakness. But
which I would have thought energy qualified as.
Energy up 55%. If you look at XLE year to date, but I think you got to be a little more selective. So you look at a name like Valero. We own Exxon, but also look at Chevron. These are names that I think the theme that we saw in 2022, where the dollar is going, I think that puts more wind in the sails. And that same theme in 2022 of owning the sector of energy persists in 2023.
So there are some big calls out there today that saying actually you should buy the dollar, go long it, it's going to have another big year. If that's the case, does that hurt your energy trade?
It does, but that's the consensus view. The consensus view is the Fed is right. My view from Chicago and sometimes Nashville is the fact that the Fed has never been right, going back decades and decades. So I'm going to bet on the old bond trader in me, Kelly, and bet on the fact that the Treasury market, specifically the 2-year and 10-year, is forecasting that we are going to get through this storm.
All right. We will leave it on that hopeful note because we need it today. Jeff, thank you again. Really appreciate it.
Great seeing you, Kelly.
Jeff Kilburg.